Hey, good morning, everybody. This is Sid Hamid and
Dan Moran.
We're here with Real Estate Investment Solutions Group, REI-SG. Today, we're going to be making a video on non-performing notes, the basics of non-performing mortgage notes. So we're going to get into it. We're going to give you just enough information to get the understanding, and we're going to have a lot of other videos coming and explaining the process, the valuation, the taxes, all the different things. So today, it's going to be a small, short video on talking about the basics of non-performing mortgages.
Okay, so I'm going to do this real time, draw it up for you. Let's talk at first, non-performing note. A note is a promise to pay, right? It's an IOU. It's the document you sign when you buy your house. Anybody who's bought a house has done this. They promise to pay back this. So let's say they had a mortgage for $100,000. Okay, well, what happened a few years ago? Property values crashed. Now their house is really still only worth $70,000. They're underwater. Maybe they lost their job or whatever, and they're not paying. So it's a non-performing note. Why would you buy a non-performing note, Sid?
One, you get an awesome deal, and we're buying these things at such a great price. So there's a lot of non-performing assets out there to be had. So our main objective is to go after the assets that are in great neighborhoods, that have great cash flow. So we're looking for assets that are at a discounted price.
Right, so the basics are, just like buying a house for rehab and fixing it up, we would buy a non-performing note and then rehab it with the owner. And we're buying the debt for $100,000 of debt for a much lower price. Even though the property value is less, that's the key. We're buying it based on the property value, a percentage of the property value, and of course a percentage of the note value. But we're going to buy these at somewhere maybe around
50 cents.
$35,000. So we're paying about maybe half of what the property value is, less if the property is valued less, and maybe a third or less of the actual note value. Remember, this doesn't change at all. That note value is still way up there. We're buying it at a big discount so we can give that person a big break, get them back on track. And that's how we make money. We actually, because we're buying at such a discount, there's a whole lot of ways to make money out of this. Exit strategies.
Well, let me ask you a question, Dan. So how do you know that the fair market value is $70,000 today?
Well, if I'm familiar with the places near me, I ask a real estate agent.
Right.
Maybe I'm already experienced in real estate.
Right.
And or if it's in a far off place like Ohio or something like that,
right,
I find a real estate agent there, or I go to a company that actually does valuations for a living. I pay them a few dollars.
Okay.
And I find out get a good idea what the valuation is. I can do some online research with Zillow and things like that, kind of get an idea,
right,
but the spread on those is so big.
Right.
We at REI-SG are building those relationships around the country in our target market so we can value things very accurately, right, and that's one thing we do. In these exit strategies, there's a lot of ways to make money, but due diligence, due diligence, due diligence is the three keys to making money in this. Right. The first due diligence you do is that asset valued high enough to buy it at this price?
Verify the valuation. Verify the valuation by having a local real estate agent go to the property, do a BPO, look at the property. Is it vacant? Is it occupied? What condition the property is in? What neighborhood the property is in? And then we move forward. That's the first due diligence process.
Right, so in future videos we're going to talk about all these different exit strategies. We're going to talk about how to do diligence to find out whether that's 70K or not, find out whether there's liens, back taxes, things like that, tell you where you can find these, how to find these, and how to buy them at this price. Of course, as always, we're looking for joint venture investors. We do all the legwork, we do all the hard work, and we're looking for joint venture funding partners so we can all reap the rewards of this.
All right, so the question is, so this is the fair market value. How are you going to be able to get it at $35,000 at a 50% discount? How are you going to be able to get it at that price?
Well, one way is, again, we have relationships with a lot of hedge funds and things around the industry, right, and we're going to get bulk lists of these. And that's about the going price right now. 50 in a rising market, some of the hot markets, you might be paying 55 cents on the dollar, 60 cents on the dollar. But here's the key. A lot of times their BPO they did is old. So they may have only valued this at $60,000.
Okay.
So yeah, I'm giving them what they want. They're 55 cents on the dollar, but it's already risen a little bit. Yep. So with the rising markets, there's great opportunities to get into a lot of different exit strategies. And there's a lot of different ways to make money out of this relative to the traditional way of real estate investing, where you actually already have the property.
Right.
Now remember, we're buying the debt, okay? We're taking on the role of the bank.
Exactly.
So banks are some of the richest institutions on the planet, right, Sid?
Yep.
Okay? The banks are some of the richest institutions on the planet. Why not be like the bank?
Exactly.
Buy the debt, control the asset through the debt, and reap the rewards of cash flow without having to be responsible for the actual property.
Right.
When your furnace breaks, Sid, do you call Bank of America?
No, I don't. I don't call. I call the handyman.
Okay, I have rentals too. Sid has rentals,
Yep.
and I just got a call about a leaky roof in one of my rentals. Fortunately, insurance is covering this particular thing. Actually, the workmanship, it was a bad gutter, and we're going to get it taken care of. But man, I dread that call.
Right.
And a month earlier on a different rental property I have, had to take a tree down, $750. You know how much rent I got on that house for that much?
No, tell me.
$725
Wow.
minus the 10% fee.
Right.
I'm underwater for that month.
Right.
So I don't have that problem with non-performing notes. I buy that, I get cash flow. Now I don't get the appreciation as it goes up every year, but remember, this is $70,000 that's going up. This number I bought here, this $100,000 isn't changing unless I want it to.
Okay.
And I'm in full control for which exit strategies I can deploy.
Just quickly, like how many exit strategies with this? How many ways can you really do this? 3, 4, 5, 10 different ways of exiting?
I mean, there's variation. There's several main ways. We'll talk about those. We'll cover the basics on those. But there's little variations on all of them.
Okay.
Get them to pay, get them back on track is the #1 exit strategy. Trying to get an owner back on track to start paying you, even at a lower amount, turns that non-performing asset into a performing asset, which now a hedge fund may buy back from me. There's a lot of hedge funds selling these out to small investors like us.
Right.
We get them non-performing. We do the legwork with the people. We get their credit score back up. We get them performing again. And now all of a sudden that non-performing asset we bought at 40 cents on the dollar or 35 cents on the dollar of this amount, we're now selling back at 60 or 70 cents on the dollar or 80 cents on the dollar of this rising market value amount. So we're able to make 20, 30, 40, 50% on these when that happens. And we're getting cash flow along the way in the process. It's a great model, keeps people in their homes. If they've already left the home, we might foreclose on that and take that strategy and either get an investor to pay us through the foreclosure at the courthouse steps process. So I'm the guy behind that lawyer at the courthouse steps. He's representing me. And now, how many people have investors gone out and paid? There's 20 or 30 people that show up at the courthouse steps wanting to bid on my asset.
Exactly.
I'm not one of those guys buying a house that I'm hoping I'm going to make money off it. I'm selling it to those people that are overpaying.
So you could buy it, and then you could actually take it to the auction at the courthouse and sell it and get your money out of there. That's
Absolutely. If you can't get them reperforming, which is the safest, best exit strategy. We're always trying to keep people in the house if we can. But if it's already an abandoned asset, we're probably going to foreclose and just sell it off at the courthouse earlier, or even maybe just work with the owner to get a short sale, which is even better than that, because then we don't have the foreclosure costs.
Exactly. So the key with real estate is to buy it at the cheapest price possible. That's the key with real estate. I don't care if you're rehabbing or you're buying notes, is to buy it at the cheapest price possible. So by working with the hedge funds and by working with the banks, and they have thousands of these non-performing assets that they have to liquidate, we're trying to get them at 30 to 40 to 50 cents on a dollar. And that's how, when we have those prices, we have multiple ways of exiting on these things. So, like Dan said, we could buy the house at a cheap price and have it auctioned off. We could do a loan modification with the person that is living in the house and do a workout.
Always the first choice. Always
That's
first
always
choice.
the first choice. Now, the fact that we're the bank, we have a lot more leniency to work with them and to waive the principles, the interest, and things
We
like
can
that.
give them a break on their payment. We can give a break on the arrears, which is one of the problems. The banks, in their rigid formats, say, you have to pay back all the back payments before you can get started again.
Right.
No one has $10,000 or $20,000 that can plunk down and do that.
Yep.
I'm just doing one recently, getting a woman back on track. It's even an investment property for her,
yep.
but it's one of her only means of income.
Yep.
And I'm giving her a forbearance agreement, getting her back on track. She's paying me $5,000 to restart. She hasn't been paying for 4 years.
Right.
It's a pretty good bargain.
Right.
Instead of me taking the house, I can, or foreclosing on the house, I'm not actually taking it. Remember, I'm only buying the debt. I don't have the house. And I'm getting her back on track. Mm-hmm. She's going to pay me $390 a month for a few months. She's going to start with $5,000. Her son's helping her out. They're going to spread that payment over 4 or 5 months.
Okay.
Well, I only bought that asset for $26,000.
Wow.
Think about how that, and then I can either sell that note off to another investor that may want it now as a reperformed asset.
A reperforming asset.
Reperformed asset, or just keep it for cash flow.
So if you do that as a reperformance, so you got it at 35, and the value might be 70, so you could actually sell that for like $60,000, $70,000 as a reperforming asset.
Yeah, 50 to 60, 55, something like that. It depends on how much this is rised up and what we drop this to and things like that. We'll get into those details on some exit strategies, some basics of each exit strategy.
Right.
You know, there would be thousands of hours of video if we talked about every single exit strategy and every nuance.
Right.
So how about we just wrap this up here right now? We're RAISG, Real Estate Investment Solutions Group.
Yep.
And stay tuned to this channel. We're going to have a bunch more videos on how to do these and a little bit of a series on how to do each one.
Okay.
And we're looking for joint venture investor partners to be along the ride with us.
And then on one of our videos, we'll explain to you what does a joint venture relationship look like. So stay tuned to REI-SG.com, Real Estate Investment Solutions Group. Dan Moran and Sid Hamid. Our phone number is 1-844-NOTE-GUYS. Thank you very much. Take care. Appreciate you guys.